Good morning, everybody. Hey, welcome to what is it? Wednesday, isn't it? January 18th. This month's just flying by before you know it. January is going to be over and we'll be into the second month of 2023. Hard to believe, isn't it? Hey, yesterday was, somewhat of a down day, maybe a little mixed in there. We'll talk about that and more in just a few minutes. Before we do that, though, remember every morning we start the same place. And that's, do you have too much risk in your portfolio? That can be a problem. That's why I developed the core retirement design. Give us a call at 863-382-0037 to walk through our core retirement analysis, where we make sure you're on the right path to the retirement you always dreamed of. So with that, hey, we're going to join the radio here in just a minute.
Services, and he's got our update on what's going on this Wednesday, hump day, middle of the week on our markets. Hey, Phillip, how are you today?
Hey, good morning, Doug. Doing well today. I'm sure you're counting down the days till Dave gets back so you get to sleep in a little bit longer.
Yes, I am. Not a morning person.
All right. Well, hey, let's kind of start off with what happened yesterday. And it was, it was a mixed day to say the best. Okay. We had the S&P 500 down 0.2%. The big loser yesterday was the Dow Jones Industrial 30, and it was down 1.14%. And a lot of that was because, remember yesterday we talked about Goldman Sachs missing their numbers significantly. And so the Goldman Sachs really dragged down the Dow yesterday. The Dow Jones, if folks remember, it is a price-weighted index, not a capital-based index. So when a price starts to drop, it takes a hit harder than the other indexes do. So again, down almost $400 yesterday. NASDAQ was actually in the green yesterday, up a little over 0.1%. That was almost $16. So good news there. We saw some upward movement there. Today, starting off, when I first look at the futures, it was kind of a little bit of a mixed bag. But it's still a mixed bag. You know, you got to click it by the second, and it changes by the second, folks. But today, remember, I told you it's a big day. We've got a lot of numbers coming out. We got retail sales coming out and the final number for the producer price index. Those things are important to really kind of gauge how inflation is doing. And so all of those things came in lower than expected. So retail sales, the month of November was actually down 1%. For the month of December, the expectation was that it would be down another 0.1%. It actually was down 1.1%. Overall retail sales. Now we have another number that we look at when it comes to retail sales, because that big number includes automobiles and other things that they start to parse out of there. So the retail sales, not including motor vehicles. So how well did they do? Well, in the month of November, they were down 0.6%. The expectation for December was they were going to be down 0.5%. They were actually down another 1.1%. So a big miss there when it comes to retail sales. Again, people are having to decide what to spend money on with inflation being so high. The last number that we want to talk about is a producer price index. That's how much wholesale prices are going up. And so in the month of November, wholesale producer price index went up 0.2%. The expectation for December was it was going to be down 0.1%. It actually fell 0.5%. And so what I looked at, I started looking at what the futures were doing prior to and after these numbers came out. And so because I thought that the stock market would kind of like these numbers, because it shows that interest rate hikes are working. People aren't spending as much money, but it also means that economy is slowing down. And so we saw that the slight rise in futures that we did have, because they were trading somewhere between $35 and $40 on the Dow this morning, really fell off after these numbers came out. And so it could be a tougher day as people parse through these numbers to determine what they think they mean for us. Now, another number that comes out at 10 o'clock this morning, which could weigh in on how well the markets close today, is going to be the National Home Builders Association Home Builders Index. And so that will be one that we want to look at about 10 o'clock this morning. We do have a few earnings coming out this morning. As we look at where we ended up, we did have some more financials report. When I look at kind of the regional financials, it's a mixed bag. Some of the regionals beat earnings expectations, some of them missed earnings expectations. We got two of the national brands, and that's PNC Financial, and that's PNC Bank. They are a large regional bank. They missed. They missed by almost 20 cents a share when it comes to their earnings. Revenue also was a little short of expectations. And so they're trading down this morning. At least they were a minute ago. Get my computer to work right here. Okay. Well, that one's not coming up. So we go to the next one. So we'll move to Interactive Brokers, the brokerage firm. They beat. They came in at $1.30 a share compared to $1.17 that was expected. Adjusted revenue was really pretty good. They came in at $958 million compared to the $924 million that was expected. So some good news for them this morning as well. We've got them trading up right now about 3.6%. PNC, let's see if I can pull that one up now. It's down. PNC's down big, down 5.6% this morning based on their financials. We had a couple other companies report their earnings, not necessarily in the financial industry, but United Airlines in the travel industry. They beat expectations this morning pretty substantially. Their earnings per share, they beat by about 36 cents a share, came in at $2.46 a share, and the revenue came in at $2.4 billion. That was $200 million more than expected. So they're doing pretty well this morning, trading up 4.3% before the market gets going today. That one's travel based. We have one more, and this one is transportation based. JB Hunt reported, and they not quite so good. They fell short. They missed on earnings. They came in at they were expected to make $2.44 a share. They came in at $1.92, and their revenue missed by almost $200 million. So not so good for them. And they're trading actually not too bad. They're actually staying flat right now, up about 0.1% before the market gets going. You never know what people read into the final reports. But so that's what we've got on the earnings front. We'll have more earnings coming in tomorrow, as well as tomorrow's Thursday. So it'll be Jobs Thursday tomorrow. And we'll talk about initial jobless claims, as well as tomorrow, another big day on top of jobs is we got real estate information. We've got building permits and housing starts. Those things will be important tomorrow when we get the day started. So as we kind of close out this portion of the show today, we'll talk about where we are right now. We're seeing a bounce actually in the stock market. They had really flattened out and gone negative, but the Dow is actually up a little over 0.1%. That's almost $50. S&P 500 is up 1/3%. That's $13. And the NASDAQ 100 is up a little over 0.5%, or $61. Russell 2000 is making a comeback this morning as well, up 0.4%, a little over $7 in that index. Gold and silver both making a comeback after yesterday's start to the day. Silver's up almost 1%. Gold is up almost 0.7%. So doing well there. The one that we don't like to see going up is making some huge strides again today, and that's crude oil. We are up 1.6% this morning. we're seeing the price of oil right now at $81.73 a barrel. I was reading an article this morning that gave me some concern that oil prices are going to continue to rise because of the demand now that we're seeing as China opens back up. Their usage of oil is increasing as well. So because of that, we're seeing an increase in the price, and we may not see it retreat for a while based on a couple articles that we've read over time. The other area I want to mention real quick is jobs, right? We see Microsoft is laying off some folks. I think they're laying off about 10 or 12, about 5% of their workforce, which is a pretty good size number as we get going this morning. With that, let me give you the international numbers. Europe is kind of a mixed bag this morning, nothing major, either up a couple tenths of a percent or down flat. Asia is all pretty much in the green this morning. Nikkei is making a big jump today, up 2.5% this morning before we get going. Hey folks, listen, we developed our core retirement design to help people really truly determine the amount of risk they have in their portfolio to make sure it lines up with the risk they should have. And if you're 5 years out from retirement, that can be vitally important. The other thing, go to our website, statlerfinancial.com. We've got a couple retirement workshops coming up next week. If you are 5 years out from retirement, a great opportunity to get some good information there about things you need to be planning for. You can go to our website at statlerfinancial.com, and there's a link there to register. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All right, Phillip, thanks for the update, and we will talk to you again tomorrow morning.
All right, man, you have a great day, and we'll be back with you tomorrow.
All right, have a great day, too.
This is your captain speaking. We're expecting fair skies, a smooth flight, and about a 85% chance or so of making it.